We've been talking about it all hour, the big reveal. Check out the cover of this week's Barron's magazine, and it is about Japan. Jack, is it time to go all in Japan?
Well, a couple of months ago, Maria, I was meeting with the head of research at Janus, and she was very excited about Japan, something she hadn't been excited about for a long time, because she said a company had just done layoffs. Now, that's sad in most cases. In this case, it suggested that the sclerotic, bloated business culture of Japan is finally cracking. They are actually initiating dividends. They are buying back stock. And their new corporate reforms are requiring independent directors, that some of this cross-ownership of stock, which reduced competition, that's going away. So what you're seeing is horrible margins in Japan. In this country, maybe operating margins around 15%. In Japan, in 2010, they were at 5%. Last year, 7%. This year, 8%. We're finally seeing some movement. Abe is making lots of reforms to try to do this. You know, the government, which poured pension money into bonds that were yielding, what, Bob? Half a percentage point, are now putting money into stocks, which is a new thing over there. So we're seeing a lot of movement and so much room for improvement that this might be a good place to put your money.
So you're really looking at the backdrop of this market, and that is a healthier corporate story with profits, Abenomics working. The trade in Japan has been buy the exporters of Japan, but hedge out the yen because the yen's under pressure. Is that still the call?
I think so, but you can also buy where you see the growth is in profit growth in local currency. So yeah, I think it's a safer move probably to hedge, but when I advise long-term investors, I think it all bounces out in the end. Don't hedge. That currency actually will give you a little bit of diversification. Right now, it's a strong dollar. In the short term, I don't see anything weakening the dollar. But again, a long-term investor, eventually the dollar's going to go down. Why not own things in yen?
Bob, what's your take on Japan?
I think you have the story. In the U.S., we've been raising profit margins and looking for, what's under the rock for years. Japan's just starting.
Yeah.
The opportunity becomes shareholder friendly. Profit margins, the right way for corporate governance, raising dividends, buying back stock, caring about the shareholder. There's a lot of low-hanging fruit.
The Nikkei has been up already, Joe, and it's partly the fact that Abenomics, people have been bullish on the economy coming back.
It seems like after all the iterations of different economic policies over the last 10 years that something is finally sticking. What I'd be curious to know actually is some analysts say that Japan ranks second after Europe for American investors for where they want to be overweight in their stocks. So does this bode well then for the American investor as Japan sort of takes off?
Well, I mean, if your question is sentiment, it worries me whenever anybody likes anything. I'd much rather be, coming out with an idea that shocks everyone.
Right. But this has been in the market.
But Japan has done very well. But I think that there's so much more room to do better. And crucially, in this profit margin thing, which, as Bob points out, that's kind of a mature play in the U.S., but there's so much room to run. Interestingly, if Japan was to simply get to the efficiency of France, not usually held up as a paragon of corporate efficiency, you'd see a 40% jump in profitability.
Mid-year, here we are in the middle of the year. We know first quarter was not great. Second quarter, we're just still looking at because we're getting the earnings out. What's your mid-year outlook at this point, Bob, looking at the rest of the year?
If you had told me, Marie, at the start of the year that earnings expectations at this point in the year are going to be down here rather than having started up here, that interest rates would be up here, having started down here, and we would have thrown Greece and China and a few other things.
It's been a busy year.
The market would have struggled.
Right.
It's done really, really well in the face of all that. If we can get some earnings improvement, and I think we will, as we chatted earlier about the U.S. consumer, if the consumer spends a little bit more money, earnings expectations are too low for the second half, and that will make the market okay.
What about CapEx? I mean, isn't that also part of the story here? And we have been waiting for a recovery in CapEx, still haven't gotten it.
Yeah, still haven't gotten a lot. We'll get a little more, but that's not the story. It's consumer spending, in my view. Eventually, CapEx will pick up the mantle, but I don't think that's 2015.
All right, we will leave it there. Jack Otter, Bob Dahl, good to see you. Thank you so much for joining us. Joe, we'll see you later on in the program. Technology.